surprised to see the gold price spike up to 1860 within the next 4 or 5 months. We wouldn't be surprised to see the price drop back to 1790 within the next 4 to 6 months either. We think that over the course of 2022, what you're going to see is significant consolidation in the gold and silver price.
Mm-hmm. Okay, very good. Now let's talk about silver then. Silver is an asset that you cover very closely. The Silver Institute came out with a report this week, and they're projecting a huge increase in physical silver demand, 1.1 billion ounces to be exact. Do you agree with this analysis?
Well, the Silver Institute kind of has funky numbers. You know, they throw a surrogate for investment demand in with fabrication demand. We do commodities research 101. So we look at total supply, mine production and scrap, and fabrication demand. Fabrication demand is probably going to rise 2-3% this year on a global basis. Investment demand, we actually think, is probably going to decline from last year's levels, which were pretty high, back to levels that we saw in 2020 when the silver price rose to $30, $32 an ounce.
Okay.
So we see some investor softness in investment demand, but looking at the balance of the market, we look at total supply less fabrication demand. Fabrication demand is more constrained this year than some numbers would think, have you believe.
So they're projecting 8% gain in physical demand. Your analysis projects less, I presume?
Yeah.
Okay.
As I said, we're looking at 2 or 3% increase in fabrication demand, and we're looking at a decline in investment demand.
Let's assume it goes. Let's assume it goes to 8%. Let's assume it grows to 8%. I'm not saying it will, but let's just hypothetically, for the sake of the exercise, assume it grows to 8%, even 10, 20%. Would that increase in physical demand have any significant impact on the price? And I think you have some examples, for example, to showcase, like Berkshire Hathaway's purchasing of silver in the 90s, for example. But my question still stands. At what point does physical demand or an increase in physical demand actually start to reflect in the price of silver?
You're not comparing apples and oranges. You've got a fruit salad there. I mean,
okay.
You've got all kinds of things.
Let's
You're talking about investment demand, you're talking about fabrication demand. And then the second thing is, at what pace and what timing and what reasons are behind the increase? Berkshire Hathaway bought a lot of silver and drove the price up $1.50. Yeah, and they bought it as an investor.
How much did they buy? How much did they buy?
They bought 129.7 million ounces.
This was in 98, right?
They actually bought it forward in 1997, and they took delivery in the first 4 months of 1998.
Okay. And that had what, $1 impact, you said?
Well, the price actually, when they were buying it, the price hardly moved because they were buying forwards. When they started taking delivery and people realized that something was going on, the price rose about 50 cents. And then on February 3rd, 1998, Berkshire Hathaway issued a press release. And they did that because Salomon Brothers, who was their agent in buying it, was being sued by Marty Armstrong and a bunch of people that he had pulled together, saying that that Salomon and unnamed co-conspirators were trying to squeeze the silver market. And so Berkshire Hathaway came out with a press release on February 3rd and said, look, we've been buying silver, and we bought 129.7. We bought it for ourselves as investments based on some really good research that is out there in the market. We didn't have any special insights. This is research that's well distributed, and we bought it as an investment. We were acting by ourselves. We don't know anybody else who's buying silver. We used one brokerage house as an agent, and they were only working for us in doing this. And that sort of destroyed the class action conspiracy to squeeze the market lawsuit, and it went away, right? When Berkshire Hathaway made that announcement, the price went up about $1.50, right? And then as people caught on what was going on, they bid the price up another $1. But all of that increase, $1.50, and then the next $1, so that all of that $2.50 increase was not a reflection of Berkshire Hathaway buying 129.7 million ounces of silver. It was a reflection of people piling into the silver market after they heard that Berkshire Hathaway had bought silver 4 months ago.
Okay. So at what point then would physical demand, again, not try to make a fruit salad here, maybe you can specify what particular part of physical demand needs to spike in order to see any sort of price movement in the spot market?
Well, I don't think anything needs to spike, but an increase in investment demand or an increase in fabrication demand, either suddenly or slowly, can push the price up. If you go back to 2020, investors were buying in 20. Let me just grab my precious metals advisory.
I'm confused. I mean, isn't that exactly what Berkshire Hathaway did? They bought 110 million ounces. Isn't that part of investment demand? A sudden spike?
Yeah, that was part of investment demand.
But it still had no impact on the price, so they didn't buy enough.
Well, they bought wisely. They knew what they were doing. If we look at investment demand doubled from 40 million ounces, real measures of investment demand, not promotional estimates. Our numbers are that investment demand was 40 million ounces in 2019 and 80 million ounces in 2020. And the silver price, as you know, went from $14 an ounce in 2019 to $29.26. And actually on an intraday basis got up to about $32. So if you see a doubling of investment demand from one year to the next, you should expect the price to increase and increase significantly. And, we got up to 80 million ounces. Then last year, we think it was over 100 million ounces of investment demand. And the price actually moved sideways to lower. And then we think that it's going to subside further, investment demand, going to subside again in 2022, because you got a lot of disenchanted new silver investors, people who were listening to things on the internet and saying, oh, well, silver's going to $50 or $100 or $1,000 by April of 2021. Then it was July, then it was August, and now it's, I guess, February of 2022. Oops, we're there, and the price is only $23 an ounce. So you've got a lot of disenchanted investors who are selling some of their silver, reducing net investment demand, and you've got a lot fewer investors buying silver because they say, wow, look at what these guys cost investors by, look at how much money investors lost by drinking the Kool-Aid last year. So we think that investment demand will be down this year and silver prices will be flat to lower.
So you don't think so that's what the argument is from some of these reports. You don't think that disenchanted investors are coming back to the market. All right, so what is a realistic price forecast for silver then, given your outlook?
Well, we think on a short-term basis, like an intraday basis, the price can spike up to $25.50 at some point over the first half of this year. But on an annual average basis, we're not looking for the silver price to rise sharply over the course of this year. We think it's going to take some time for investors to come back and bid the price up.
Okay, very good. Jeff, thank you very much for your analysis today. Very detailed explanation. I look forward to speaking with you next time. Thank you.
Always a pleasure.
Thank you for watching Kitco News. I'm David Lin.